All right, guys. Let's go ahead and get started. Just so you guys know, sometimes I'll play a little bit of music to give you guys a chance to come into the conversation. I want to welcome everybody to the Black Financial Channel. It's theblackfinancialchannel.com. This is the black version of CNBC, except better, because we take financial news and information and commentary and kind of give a black spin on it to make it relevant to you and your community and what's going on with black folks, because you know we believe in black wealth. This is also brought to you by the Black Business School, which is an institution created for you and by you. We have PhDs and lawyers and professors and entrepreneurs who can teach you everything you need to know. So if you want to find out about your financial future and how to build the future for your family that you'd like to have, just go to theblackbusinessschool.com, theblackbusinessschool.com. All right, now I see Elon is asking for an invitation to the wedding. Well, thank you for the congratulations, by the way. Those of you who heard a little bit about it, apparently the proposal went kind of viral. I think last time we checked, it had about 400,000 views on the internet or something. And I'm okay with that, because I think black love is one of the most important investments that you can ever make in your life. The investment of the heart is really more important than any investment that as it relates to money. And also, I just believe in black women. I believe in black family as a key to building wealth and building empires. So why not lead by example? So here we are. We're out here. If you want to follow along, we actually have a Facebook page set up. You can go to boyceandalicia.com. That's boyceandalicia.com. And you can follow along, and we'll just share a bunch of random stuff about our lives as we get ready for this wedding, which is going to be interesting. But anyway, let me keep going. Shout out your city that you're from. Shout out the city that you're coming in from this morning. I see Johnny. How you doing, Johnny? And William Williams and Jay Real from Indianapolis. William Williams from Virginia. I'll be down near Indianapolis very soon. I'm going to Louisville, Kentucky to speak at the Diverse Entrepreneurship Summit on the 14th. So if you want to know more about that, go to drboycelouisville.com. Let's see. I see good morning from Houston, H-Town Click. Yep, and you know I'll be in Houston for the All Black National Convention on September 27th, that weekend. So you can go to allblacknationalconvention.com to check that out. Okay, so hit the thumbs up button. Please hit the thumbs up button so other people can see this. David K., I see you from London, Columbus, Ohio. I love weddings. I want to come. I have to tell you, my husband's story is so awesome. Well, you know what? I will try to make it a public wedding. I just don't know. At this point, we ain't even picked a venue yet, but I'll keep you posted. Well, let's jump into the conversation for today. This has to do with this company called WeWork. Give me a yes or no if you've heard anything about, okay, Jay Real, you're coming to Kentucky? Great. I can't wait to meet you. I look forward to shaking your hand in person or giving you a hug, either one, whichever one you want. I'm easy. I'm an easy catch. So if you want a handshake, I'll give you that. If you want a hug, I'll give you that too. All right. So WeWork is a company that has been out for a while. I don't know if you guys have heard of WeWork. Give me a yes if you know about WeWork and a no if you don't. That way I can get a sense of who knows what. Let's see here. I'm looking to see. Thank you, Alzania. I appreciate those kind words. Thank you so much. Okay, I see yes and no. Okay, I see some yeses and some nos. All right, so let me break this down real quick. WeWork is like basically they create what they call co-working spaces. Where you can go and pay them some money. And if you have a company that can't afford office space, or you just want a different kind of place to work where you can be around other entrepreneurs and collaborate with them and things like that, WeWork is a great place to go. I would love to create that for the Black Business School. It's just tough to raise the capital. I mean, because WeWork, I think they've received $10 billion in capital. I mean, some ridiculous amount of money. So they're able to kind of do this all throughout the world. But personally, I would love to do that for Black people at some point, and I will. We just got to figure out how to raise all the money to do this. But basically, they have this interesting business model. A lot of people consider them to be a little bit like a real estate company, because I think what they do is they end up buying these buildings and leasing the space out to themselves and to other companies. And so there's an expectation that they can, fill the spaces up. Also, they get this money revenue from clients, like you and I, maybe entrepreneurs who pay money to get access to conference rooms and office space there. Those are a couple things I know that WeWork does. They do a few other things as well, but they're they're growing. They're a nice big company worth billions of dollars, and they received a massive investment from a guy named Mayoshi Son, who created something called the Vision Fund. And the Vision Fund is this $100 billion investment fund where they go around the globe and they just put billions of dollars into these companies. A couple of major companies they put money into were Uber and Slack. Slack is kind of this cooperative, like working software where people can collaborate together on team and as teams. I didn't like the Slack investment because I really felt uncomfortable with the fact that Microsoft also entered into that arena, and I really wasn't sure how they were going to really be able to compete with Microsoft. And so I didn't invest in Slack. And then Uber is a really interesting company because Uber clearly is powerful, and there's this massive Death Star that's just got all this reach. But the problem for Uber is that Uber doesn't make money. I don't know if you guys know this, but Uber loses a ton of money. They lose, I think, about $5 billion a quarter, which is an insane kind of thing. And this is kind of a reflection on the disparities of just access to capital and how just white folks have money to burn. Like they just most of y'all, I know you start your business, you can't go 5-10 years and not make a profit and lose millions of dollars every month. Whereas some of these companies coming out of Silicon Valley can do this. And I lean back on a theory we learned in grad school called the free cash flow theory. I believe that having so much easy access to money makes these businesses highly inefficient and incredibly problematic. And I'm gonna tell you, my opinion is that if there's an economic downturn, you're gonna see a lot of these companies slash and burn. They're gonna start rewriting the whole model of what, of how businesses should be built in Silicon Valley. I think they're gonna have to recalibrate everything because I think they give these companies just so much money and they end up wasting it and getting all crazy and weird and idealistic and and all this other stuff. And it's fine, but you gotta make a profit at some point. So here's a few things about WeWork that concern me. First of all, please hit the thumbs up button. If you're on the Black Financial Channel, take 1 second, please hit the thumbs up button. Also, if you want to be notified whenever we go live, hit that notification bell. If you haven't done it yet, it will not notify you if I go live. If I go live, say 2 or 3 times a day, because on this channel, we just cover financial news all day long. So if you want to get notified whenever we go live, you got to hit the notification bell. So please hit the thumbs up button and please hit the notification bell. If you're on Facebook, please share this to your Facebook page so other people can see it. Okay, so first cut problem with WeWork is that they lose insane amounts of money. They lose about $219,000 an hour, which is just sick. I mean, that's an insanely sick amount of money, especially for a company like that. Uber, I could almost tolerate them losing money because I can see where Uber can eventually possibly get a win. WeWork, I don't see that. I'm just not comfortable with WeWork. I think that it's reflective of kind of how these companies have these double bottom lines now. Like all these CEOs got together and signed this pact where they all agreed to value the other stakeholders in the company outside of just the shareholders. Back in the day when I was finishing my PhD, I remember that one of the first things we were taught about capitalism, which I did not agree with actually, by the way, and I've taught in the Black Business School, we do not teach this model, but they taught that the #1 job of the company manager was to maximize shareholder wealth. That pretty much the shareholders were the primary and most important group of people of all the stakeholders in the company. And that is a bad, flawed business model because capitalism in its purest form in a one-dimensional context will ultimately destroy society. So when you have companies where you got all these other stakeholders, you've got the shareholders, of course, but you've also got your employees, you've got your suppliers, you've got your customers, you've got the environment, and you say, oh, well, only thing that matters is the shareholders. Well, then all these other stakeholders are getting screwed, and then you have the problems that you have in America right now. Employees, give me a yes or no. Do you trust corporations the way you maybe your parents did? To give you a 30-40 year job where you're going to retire and get a pension? Yes or no? Do you trust corporations to protect your financial future, or do you think that they'll chew you up and spit you out the minute they can make a profit somewhere else? Right? You think about suppliers. Suppliers don't trust these corporations. They don't want to do business with them because they're scared, right? Because they're like, well, damn. I mean, if you get upset or if you want to save a couple of dollars, you're gonna chop me out, and I got this family business going on. Customers don't trust corporations that operate in a shady capacity. And the thing that they forget about is that one of the arguments they might try to make is that the shareholders are the most important group of people because the shareholders are the ones who contribute the capital and all this other stuff. Yeah, but everybody's contributing capital. They're just not contributing financial capital. Relationship capital really matters. Employees are contributing their lives. That's human capital. It's very important for them, right? So I'm not going to invest my life in a company that isn't going to invest in me, right? So the list kind of goes on and on. So they need these double bottom lines. And I've told you guys from the beginning, even before the CEO signed this pact, years ago, I was saying to Black people, do not imitate what you're seeing in the world. Do not run around here trying to be like white folks, because they're doing it wrong. And ultimately, it's going to come back to bite them in the butt. Now it's biting them in the butt. Now they're trying to reshape their models. They're going back to what is referred to as managerialism, which existed before the 1970s, when hardcore gangster capitalism kind of took hold and people began to believe that greed was good. I believe in the Black community, greed is not good. I believe in the Black community, you can do well and do good at the same time. I believe in the Black community that you can make money and still pay your employees well, and still take care of your hood, and still do the right thing, and still treat your customers with respect, still take good care of your suppliers. I believe you can do all these things, as opposed to just simply thinking like, well, the owners of the company should do well and everybody else should be screwed. Okay, so if anybody ever says the Black Business School, they teach Black capitalism, I need you to correct them and say, no, we do not teach Black capitalism. We teach free enterprise. We teach Black wealth building as a tool for the enhancement of the lives of everyone at every level of society. So we challenge a lot of other paradigms of thought. For example, we believe, for example, in our community that, a couple of successful billionaire Black celebrities, that's a win for the Black community. No, it's not. The wins for the community are things that are wins for the masses. If you can't explain how it translates into better economic opportunities for thousands and thousands of people, then it's not a win for Black people. It's just not a win. So anyway, let me keep going. So one of the things about WeWork is actually trying to do an IPO right now, an initial public offering there, but they're trying to go public, and it ain't working out so well. I'm reading here in Markets Insider. It says WeWork has slashed the valuation it seeks as a public company to below 20 billion, which is much lower than the original 47 billion they were looking for. Last week, the Journal reported that the shared office space company was considering an IPO at about 20 billion, which is less than half of the 47 billion private valuation is secured earlier this year. So the Vision Fund with Mayoshi Son invested in WeWork with a valuation of 47 billion. But since that time, the company has sort of gone on a roadshow to try to see who would be interested in buying its stock with, at a valuation of 47 billion. And there aren't many takers. A lot of people are like, no, it costs too much. So they're consistently dropping the prices so that they can, meet the market. And so this has caused the people at the Vision Fund to say, hey, look, we have $10 billion in this company. We don't want you to go public yet. We don't want you to go public yet. And apparently they're trying to push this forward. So I'm reading here also at Reuters, they're saying the We company, WeWork's parent, may seek a valuation of as low as 15 to 18 billion. This means that SoftBank, which invested 10.65 billion in WeWork since 2017, would have to write down the value of its investment should the IPO go ahead. The sources familiar with the situation caution that no final decisions have yet been made, and the plans around valuation and timing of the IPO are still subject to change. The sources requested anonymity because the matter is private. The sharply lower valuation reflects concerns around the sustainability of the We company's business model, which relies on a mix of long-term liabilities and short-term revenue, and how such a model would weather an economic downturn to investors and analysts. And I agree with that. One of the things that about these companies that have these massive valuations and they haven't really done anything, they haven't even made a profit yet, is that it's almost like a type of leverage where you're kind of like, wow, leverage is like a seesaw, a really high seesaw. When you're doing good, you're way up, but when you're doing bad, you crash hard. So these companies, I've just sat and wondered, like, what's going to happen to these companies if there's a recession? If there's a recession, a lot of these tech companies, you're just gonna see that bubble pop, and these valuations drop. Like, you'll see stock prices drop by 60%, 70%, and then maybe never recover because there's not a lot of fundamentals there to kind of justify the existing stock price. So I look at WeWork and I see a company that's infected, what I would call infected with uncertainty. Infected with uncertainty means there are a lot of, unknowns and unknown unknowns with this company. And I think the market's getting wind of that. I personally don't plan to invest in the company's IPO. Now, then again, though, maybe if they go out with a much lower valuation, maybe I'll think about it. But I almost feel like a lot of that valuation is kind of coming out of thin air. So anyway, let me read a little bit more, and then I'll kind of just give you my final take on this. WeWork planned to raise $3 to $4 billion by going public and secure another $6 billion in debt contingent on its IPO raising at least $3 billion, the journal said. Without those funds, it could struggle to maintain its rapid growth, perhaps its biggest draw for investors. So growth costs money. They got to raise money to maintain the growth. So if they can't raise the money, they can't grow, which is going to reduce their share price and reduce their value as a company. So remember, when you start a business, growing fast isn't always a good thing. If you grow fast, you got to have cash. You have to have liquidity to maintain that. Like a growing child needs to eat a lot of food. A growing company eats a lot of cash. So sometimes you might deliberately slow down your growth because you may not be able to afford to sustain it. The company has faced growing skepticism about its path to profitability. Its revenue doubled to over $1.5 billion in the first half of 2019, but its losses ballooned by 25% to $905 million. Investors also have concerns about the CEO, Adam Neumann, and so do I. He controls the lion's share of its voting shares, which is a problem. He raised $700 million by selling and borrowing against his company stock, and even charged the company $6 million for the We trademark. So I do not like the CEO. I think he's like a greedy hippie. That's why he's got this super idealistic vision of this company, where I don't really think that making a profit for the company is all that important to him. I think he sort of has this utopian vision of what the world is supposed to look like. And I think at the same time, he's also doing these weird things like charging the company $6 million for the trademark. He owns the lion's share of the voting shares in the company, which means that his weird hippie vision is going to drive which direction this company goes. So my expectation is that, I'll be done in one second. I want to give you a kiss before you go. So yeah. Okay. Yeah. Sorry. I know that's a private thing, but I had to say it. So sorry, guys. Now you know I kiss my woman all the time as much as possible. But I think that Mayoshi-san is going to put pressure on the CEO to leave. I think that when the CEO is out, which I don't know if he has all the ability to do that, but I think that if he can get him out of there, I think the company's valuation will go up. Because you can get a CEO who's more focused on what needs to happen for this vision fund, which is they need to make a profit. They need to have ROI for their investors. And right now, this vision fund, which is a grand experiment, $100 billion raised to go investing in all these companies, almost gangster style, like really pushing this money on these companies and giving them too much money to burn, which again goes back to that free cash flow theory I explained to you guys. When CEOs have too much money to burn, they just kind of make sloppy decisions and they throw money around and they just make it rain like a rapper in the club. And next thing you know, the company is having issues if they hit a downturn. So my argument with WeWork is that it is not a good company. It's not a company I'm going to invest in. I think it's kind of a mess right now. I think that there's probably some internal discord going on. When you're costing people billions of dollars, you're going to have some fights. And I really wouldn't be surprised if this CEO gets pushed out, because this CEO, for people that understand investing, the CEO is a real problem. And I don't really think that's going to work out for them in the long term. So that's my take on WeWork, why I'm not going to invest. I don't plan to invest in their IPO. But then again, if their valuation drops enough, say 15 billion or something, I might consider it just to have it in my portfolio in case they do pull the CEO out. So anyway, I'm going to go, guys. Hit the thumbs up button, share and subscribe button. Also, if you haven't learned to invest yet and you want to learn to buy your first share of stock, you can actually go to blackmoney100.com. That's blackmoney100.com. And there's a free training on how to buy your first share of stock. So when you come back to the Black Financial Channel, you can talk about how your portfolio is doing, stuff like that. Investing, it doesn't cost a lot of money to be an investor. You can invest with just a few dollars a week. And I can tell you, if you're not investing, you are going to find yourself missing out big time. So anyway, that's it. So have a good day, everybody. And let's see, it's a guy on YouTube bashing your marriage. Yeah, there are people that are going to bash it because, I'm going to tell you that there are people out there that don't know how, that don't respect Black women. And also, so I would say anybody who thinks that It's simping. Simping, that's the word that he used, simp. Anybody who thinks it's simping to get on your knee and express public love for a black woman is either having sex with a dude or they're chasing white women. So that's the honest to God truth. So I really don't care. Like people I will scream from the rooftop that I respect the black women in my life, my mother, my sister, my daughters, my you know, whatever the case may be, my woman, everybody. You know, because I think black women deserve to be at the top of the pile. And for some reason, you got these weak black men out here that want to put black women at the bottom of the pile. And I have no respect for you. You're not welcome here. You should go somewhere else because this is not a home for you. So just take that crap and just, you know, go somewhere with that. So anyway, I'm out of here, guys. Have a good day. I had to throw that out there. So that's what it is. So have a good day, guys. Please hit the thumbs up button. I'll see you soon. Take care. Peace.